Hi everyone, welcome to today's video. So on a recent interview, Dr. Rajan categorically said that India's economy is dangerously close to Hindu rate of growth. First and foremost, let me say it outright that I strongly disapprove of this particular terminology. I do not think that any economist, be it Indian, American, foreigner, should be using this type of a phrase. So this is one. What is the reason behind it? It's very simple that the points that Dr. Rajan was trying to communicate, it could have simply been communicated if he would have stuck to economics. This is my personal viewpoint. People can agree, disagree to this. Now, having said this, he has raised a lot of points. Some of them, according to me, are very valid points, and some of them are not valid points. Also, I get a sense that there is a little bit of fear mongering that is happening when it comes to India's growth prospects. So, on this particular video, I am going to present a very unfiltered commentary without taking any sides. I'm just going to present plain facts, show you data, graphs, charts, so that you are able to better understand and grasp what is happening in the India's economy. Should you be worried about its prospect? If you're a stock market investor or if you're planning your investment, how does this impact you? So this is going to be an extremely important video. Very humble request that please try to absorb commentary rationally. One of the key reasons why I run this channel is so that I can present neutral commentary. I give you facts, you absorb it. I do not want to become like a mainstream media where I'm just showing you one side of the equation and taking sides. If you agree to this message and if you want to support the channel, just a simple like from your side can help these type of videos reach out to more people. So without wasting any more time, let me just quickly jump into the topic and let me first and foremost discuss about the Hindu rate of growth and the phrase associated with it. So did Dr. Rajan create this phrase? The answer is no, he did not. This phrase was created by an Indian economist in the year 1978. And the message or the intent behind creating this phrase, now I do not know why it was created, but during that era, India was growing at a slightly slower pace. So the reason there was very simple, that India was a young country. We were building our systems, processes, LPG reforms that took place in 1991 accelerated our economy. But before that, we were a hyper-local economy and we used to grow at roughly 4 to 5% GDP growth. So that was a slow rate of growth. And also back in the day, India adopted a lot of socialist policies and that led to a slightly slower rate of growth of our economy. And this economy was growing at roughly 4 to 5%. And just to capture the essence of this socialism and a slow growth rate, this term was coined. Now, I do not know why this phrase was brought back to life in the year 2023 by Dr. Rajan, but whatever he wanted to communicate, he could have simply communicated it without bringing this phrase into the mix. So this is point number one. Now, point number two is that the overarching viewpoint that Dr. Rajan has expressed, it can be understood from this question number one that is there in front of your screen, and I will read out some key segments from his response. So what he has said is that India's growth rate is slowing down, and as per even the RBI, the projections are lower. So 4.2% is what RBI is projecting for the last quarter of this fiscal. Now, is this commentary incorrect? Absolutely not. So he's correct about that in terms of outlining what RBI has said. So yes, we are predicting a slowdown. Is it a cause to worry? Please continue to watch the video. You'll understand it more. But I hope we can all agree to the fact that India is unfortunately growing at a slower pace. Now, why is that the case? And should we press the panic button? For this, you need to look at the absolute data and relative data. So let me present that to you. And the first key piece of information that you must look at is the rate of GDP growth in India and understand something called as the base effect. So what is the meaning of that? Let me present that. So here is the annual GDP growth rate of India. And if you consider the last 3-4 years, it had some major prominent events. For example, during the COVID time, India's GDP growth rate shrank, right? So here it became negative 23%, negative 5.6%. So this year was a really bad year from a GDP perspective. Now, because the markets had fallen, the GDP had fallen, then the subsequent year became like dramatic rise year. For example, here the GDP growth rate was 21.6%, which is like fairly high, right? So, and then what happened that because we had grown so much in just 1 year, after that, the growth rate mellowed down. Then in the next 6 months, the India GDP was growing at 9.1%, then 5.2%, then 4.1%. Then suddenly in another 6 months, there was 13.2% growth and it kept on mellowing down. So these entire spikes, what they indicate is that, you know what, since in the last 6 months, the GDP has grown really fast. Now the GDP cannot grow at the similar rate. And this can be understood through a parallel example. So for example, consider that your salary is 100 rupees. Now next year you switch your job. you get like 20 lakhs. Now this is a 100% jump in your salary. Next year, you will be lucky if you are able to grow it at 22, 23 lakhs also, right? This will be also a 10%, 15% jump, which is very, very high. So something similar happens with GDP. For example, during the pandemic, since the GDP shrunk quite a lot, there was a lot of room for rebound. And therefore, this rebound came here. Similarly, another rebound came here. And whenever rebound happens, for example, this is going up, after that, there is something called as base effect that comes into play. Because the economy has grown really fast in the previous quarter or previous 2 quarters, the next few quarters are going to mellow down. So this is the meaning of base effect. So please understand this 4.5-5% commentary in this context. A related point here would be that you need to see India's growth rate in context of the world economy. The entire world economy is slowing down and India's economy is also slowing down. So just to complete the thought here, that number one, the 4.5% number right now looks really bad, but is it really bad? The answer is no. What is the reason for that? It is something called as the base effect. Does that mean that because base effect is in play, India is fine, there is nothing wrong in India? No, nothing like this. The economy is slowing down overall worldwide also and in India also. So this is the first key piece of information you should take away from Dr. Rajan's commentary. Now, in this context, he was asked another question that the RBI is keeping the monetary policy tight. So monetary policy tight meaning that the interest rates in the economy right now are high. For example, if you check here the data for US interest rates, you will see that it is almost making its last 10-year high. So US interest rates are also very high. Same thing is happening in India, that RBI almost every 3 months, it is increasing the interest rates. Now, is this situation forever going to continue? No, that is not going to be the case. At some stage, the interest rates are going to get cut. And in this spirit, it was asked that RBI is keeping its monetary policy tight, which means that interest rates are high. So in this context, Dr. Rajan has said that CPI inflation is above RBI's target range of inflation. Now, is he factually correct here? The answer is yes. So he is absolutely right that the current inflation in the economy is higher than the target rate of inflation. Now, does this mean that you should worry? The answer is no, you should not worry, because even in inflation, there is something called as base effect, so to say, which happens there. So let me quickly explain that to you. Now, inflation in simple terms means increase in price rises. For example, if you are buying an apple today at 100 rupees a kg and next year it goes to 106 rupees a kg, then what is the inflation? The inflation is 6%. Now, when you are increasing the prices again by 6 rupees, then what is the inflation here? The inflation will be less than 6%. So what happens is that if there is a sudden price increase from 100 to let's say 150, then it is very likely that in the 3rd, 4th, 5th year, the rate of price increase is going to slow down. Why? Again, because of base effect. So this entire debate that the target rate of inflation is 4 to 6% and India currently right now is higher and therefore RBI will have to increase the interest rates, that is not completely correct or logical, and there is a little bit of fear mongering there. So then comes the quick discussion on manufacturing and service oriented jobs and the quality of jobs that are being created. So in this context, a question around PLI or production linked incentive scheme was asked to Dr. Rajan that how far do you think that PLI schemes are successful? So he presented very relevant data here and he ended up saying this, and I will quote from this particular snippet that by the government's own stats, 15% of proposed investments have come in, but only 3% of predicted jobs have been created. So yes, this number is correct and there is no anomaly here. Then he went on to say that it will end up creating only 0.6 lakh crore of jobs, a small dent in the jobs India needs over the same period. Then there was a quick discussion on the entire topic that should we prioritize manufacturing oriented jobs or increase our manufacturing base, or should we look elsewhere? So here Dr. Rajan has said that, you know what, I am not against the manufacturing sector. What I am saying is that we should try to focus more on service oriented jobs. Now, I do 100% agree with this viewpoint. The reason there is fairly simple, that if you think about what led to the growth of Bangalore or cities like Hyderabad, it was, one could say, was the IT boom. Now, IT is a service-oriented job. It has literally lifted the incomes of several people. Now, I know many people would not agree to this viewpoint, बोलेंगे that, you know what, IT में jobs में तनख्वाह इतनी नहीं है, salary is not high, etc., etc. Agree. But if you actually look at the golden days of IT industry, service sector job, amount of salary that people were making were very, very high. Now it has started to stagnate. So maybe it makes more sense that rather than going the manufacturing way, we need to focus more on service sector jobs. And this can also be backed by looking at the data from developed countries, that almost every major developed country has a very good service sector economy. So maybe first we grow our manufacturing base, then move on to service sector economy, or maybe we can just leapfrog that manufacturing innovation and move directly to service sector. India has already done that when it comes to IT industry. And similarly, if our focus shifts towards growing our IT sector jobs or service oriented jobs, then there is a lot more youth that can benefit from that particular revolution. Then there was another quick point that was discussed on the Adani saga that has been playing out. I have already made a lot of videos, so I will keep this commentary really short. So it was said that Adani crisis has sparked worries for Indian financial contagion and ability to carry on infrastructure projects. What measures government should take to improve oversight of private family companies to address worries of Hindenburg allegations? Now here Dr. Rajan has said that see, SEBI is doing good work, regulatory framework is strong, etc. All good points. But again, a lot of questions are still dangling that no one knows the ownership of those Mauritius funds which has been holding and trading Adani stocks. Does it need help from the investigating agencies? So yes, these type of problems should be addressed, whether you support Adani Group, whether you do not support Adani Group. As a stock market investor who is looking to better the Indian investment ecosystem or better the Indian economy, having more transparency, you tell me categorically whether that helps or it does not help. So the more transparency there is, FIIs will feel more comfortable investing in Indian companies, and even you and I as normal investors will feel more comfortable. So that is the entire point. And again, keeping the politics aside, if you do a rational thought process analysis, then I think this is a sensible commentary. Then came a very important discussion on the NPA picture and the AQR exercise. So let me quickly explain that. So basically what happens is that you must have seen Vijay Mallya, Nirav Modi scam, हजार crore रुपए का loan, took that money, ran away, defaulted. Now they are tweeting sitting from UK. So which is like really bad. It should not have happened. Then after that, what happened was that Dr. Rajan has been credited with creating this AQR exercise. Now AQR, what simply means is that banks, sometimes what they say is that, hey, our asset quality is really good and the loans that we have given out are very strong. So who does the audit and what exercise can you do in order to independently assess whether this is right or wrong? So RBI came up with a framework of doing asset quality review, which was called as AQR, and Dr. Rajan has been credited with it. And in a way, this has helped the Indian banking system a lot. For example, look at the time, right? Around 2013, 14, 15, it was not a good time for the Indian banking industry. A lot of PSU scams were happening. Recently, this entire Adani issue blew up. Now, the PSU banks also fell, but it was not as if that there was like massive bloodbath when it came to PSU banks. The NPA problem to a very large extent has already gone away and bank cleanup has taken place, due to which the Indian banking industry is very solid right now. Even I put a lot of my money into Indian banks simply because of the fact that a lot of banking cleanup has happened. So this is the simple point. Now, what is the current government doing about it? Now, are they good? Are they bad? I don't know. In case you have more information, please put it in the comment box. Okay, so now comes the most interesting question that he was asked, that you were seen in Bharat Jodo Yatra led by Rahul Gandhi. Do you think it was a right decision for an independent economist like you to participate in a yatra organized by a political party? Okay, now people can have different viewpoints around this, and there are two sides to this coin. So he's trying to become the next finance minister of India if Congress wins, vagera, and all those things are correct. And that is the reason why he might have aligned himself to Bharat Jodo Yatra. So that is one side of the equation. The other side of the equation is that, hey, he's a normal citizen. He has every right to go wherever he feels like. He has every right to express his political ideology, even if you consider him to be political. So both the sides can be taken, but the practical viewpoint to any rational person here would be this. Let's see. So yes, there is a little bit of fear mongering that is being unnecessarily done. It's not as if that our Indian banking system is bad or SEBI is bad or a bunch of other different things are bad in India, or India is growing at a very slow rate. Yes, whatever slowdown has happened, it has happened because of world economic affairs that has been there. It's not as if that there is a major pitfall that is there. Now, why did I shoot this video? The reason is fairly simple, that there is a lot of fear mongering that I'm seeing right now in the market. Now, these type of viewpoints are presented. It generates a lot of heat. Phrases like Hindu growth rate are blown out of proportion. So just to present that neutral analysis, I had presented this video. A lot of viewpoints expressed by Dr. Rajan were right, no doubt about that. And a lot of viewpoints that were presented by Dr. Rajan, in my opinion, could have been presented better. Now, what is the implication of the stock market? Am I still bullish? Am I bearish? Am I neutral? So number one, I am bullish. But having said this, that given the recent slowdown or recent relative slowdown in the Indian economy and the world economy. So I feel that the sideways movement in the Indian market and the world market is going to last a little bit longer. I keep on giving a lot of useful information to all the members of the YouTube paid community member section. I talk about whatever I'm buying, selling in the Indian stock market or in the world stock market. So in case you want to get access to that closed group community, you can join the links in the community box. My viewpoint will be neutral. I hope you enjoyed this video, and if you did, do press the like button and share it with your friends, and I will see you soon.